Hello, everybody, and welcome into this week's episode of the Magnify Wealth Podcast. I'm Cameron Gannon, here with my co-host, Scott Gannon. Today, we are going to be talking about the myth that you need to take high risk to achieve high return. We've been taught that high returns equal high risk. What if that belief isn't just misleading, but it's actually harmful? Today we're going to talk about this myth and we're going to debunk it. You want to kick things off?
Sure. So just a quick little overview here. We're going to talk a little bit about why the financial industry promotes this concept. We're going to look at how traditional investing leaves individuals and companies vulnerable, and strategies to achieve high return with lower risk.
So first off, a big strategy, if you will, in our industry is using risk tolerance questionnaires. So traditional financial planners usually use risk tolerance questionnaires to help guide your investment strategies. The assumption there is that higher risk tolerance mean you can allow yourself to achieve better long-term returns. Yeah, exactly.
A bigger gambler, I should say.
So why in the world would we be encouraged to accept higher chances of losing to possibly win more? So a kind of a funny example of this, if you will, is if I'm traveling from Halifax to Vancouver on a plane. Might normally take, 7 hours? Well, if I offered you to take a ride on our new invention, a new plane that might get you there in 4 hours, but there's a 40 to 50% chance it crashes in the Rockies before it gets there, would you do it? I would say probably not. That's what you're doing by taking higher risk and hoping for higher return in the market.
Yeah, so talk about the financial industry's agenda. Like, what's in it for them? Well, the industry is designed to have people relinquish control of their money, so somebody else, i.e. money managers and planners and so on, can control it and charge fees attached to that. So basically, not only are you taking additional risk or gambling. When I say gambling, I mean you're basically investing in things you have no idea what's being invested in. You can't exercise control, and yet you're paying fees for this. So it's kind of a double whammy.
Yeah, so the saying buy and hold becomes buy, hold, and pray.
Yeah, exactly. It's not buy, hold, it's buy, hold, and pray.
Yeah, so how do the wealthy think differently here? Is the wealthy prioritize control and certainty in their life rather than looking at speculative gains and hoping and praying for the returns to come to them. They go out and control their own returns. So they do that through real
knowledge.
Estate.
Yeah.
Well, yeah, knowledge, but in things like, say, real estate that are cash flowing investments that tend to the worth tends to go up as well with inflation, and also businesses that they know and they are good at because you control them so much more than being the person on the far outside of some multinational corporation that you have a 0.001% interest in.
Yeah, I mean the summary of that is really it is about control. The closer you are to the actual investment, whether that is something in real estate or something in your own business, the closer you are to it, the better you can exercise control. But again, the big thing here is knowledge, right? We talk all the time on this podcast about helping people mitigate risk and act like the wealthy. The wealthy don't gamble. The wealthy want certainty in everything they do. And how do they do that? Number one is they protect first, like we've said many times before. And when they do invest, they invest with a whole lot of certainty attached to what they're doing.
Yeah, so why does that mean reducing risk doesn't mean selling for lower returns? Well, we've talked before on other episodes about how things like real estate, things like your own business, you should be expecting a higher return than you would in the market. And if you know what you're doing, like we said, you're taking a whole lot less risk.
Right.
And other than real estate and business ventures, it also includes creating your own private banking system. And that's what we talk about every week on here. Is infinite banking is by nature, using the high cash value dividend paying whole life insurance, it is by nature zero risk because it is guaranteed to go up every single day. So if you define risk as a 0% chance of losing, that is a zero risk place to put your money.
Exactly. So let's talk a little bit about safe and sustainable returns. Okay, so what do again, this is about a wealthy mindset, or what the wealthy do. They want stability, sustainable, and safety. Number one is take responsible for your own decisions. Do not pass this off. Educate yourself. It doesn't take a huge amount of time out of your day if you know what you're doing and you do it systematically. Just understand a few things, like the idea of, actually, this may be a bit of a tangent, but I'm going to keep it real short, is I've heard the term, and I believe it was Warren Buffett that said this, is when you diversify your knowledge. So the idea of diversification to reduce risk, all that means is you're spreading it around to more you just don't know. If you could focus in on, it doesn't have to be one or two things, it can be several things. But if you really know and understand these things, then you are taking responsibility for your financial decisions, and you're investing in things that you understand and can input influence into. Jeez, that was a tongue twister for me. Sorry about that. And of course, as Canadians, again, Cameron already mentioned about infinite banking. When we do this kind of thing, we exercise some control in that we're storing our money properly in a tax efficient vehicle, and offers that liquidity, use, and control that we always want. Yeah,
and because of that liquidity, use, and control, you can self-finance those investments that you influence and understand, so that you can build wealth without taking unnecessary risk, because you're accessing capital that is guaranteed to be able to access, and there are no terms. So you don't have, if something does go awry, you're not having someone knocking down your door for the money that you just accessed. You can repay it when and if you like.
Yeah, that's right. So again, that's all about control. It's we talk all the time, especially I'll go back to the real estate example that exercises some control. Is real estate. I believe we talked about this before, but the many different ways you can be paid with real estate, to different types of real estate. So that's I can't remember what episode it was, but real estate can pay you in so many different ways that's just another way of controlling things, right? Is if one doesn't work, the others are still working to mitigate that risk attached to whatever investment you have. So what's the key takeaway here, Cam?
Yeah, so the idea that high returns require high risk is a complete myth. By taking control and mitigating your risk, you can achieve financial freedom safely and sustainably. So we want you guys to start taking control of your own financial life, and that means educating yourself, and it also means working with a really good coach to help you explore infinite banking and to help you stay on track with focusing on what you can influence and what you can control.
So go right back to the theme of this is don't settle for buy, hold, and pray, or buy, hold, and hope, or buy, hold, and gamble, whatever you want to call it. The idea of just buy and hold in something you don't have any clue what's going on with, or maybe you do, maybe you have lots, but you can't understand the control, or you can't exert the control, and that is a problem. So
sure is. Thanks everybody for tuning in. Please do like, subscribe, share. We'll see you all next week on the Magnify Wealth Podcast.
Thanks for tuning in to the Magnify Wealth Podcast with Scott Gannon. Remember to subscribe on YouTube or your favorite podcast platform for more insights on the infinite banking concept. Until next time, remember, immediate action is the most efficient way to achieve your goals.